Welcome to Markets Now. I'm Michelle Rick along with Arlan Suderman with StoneX, and we did see mostly lower prices except for portions of the cattle complex and the pressure in the grains. Let's start off with row crop sector first, Arlan. Corn and soybeans setting back, what, because of these better than expected crop ratings?
Yeah, I think put in perspective of what we've done the last several days, we've had those yield estimates come out from Pro Farmer on Friday afternoon that were below what the market expected at 172 and 49.7 respectively for corn and soybeans. And the market rallied on that. So obviously the market thought they were somewhat higher than that at the time. And so that was a surprise to the trade. And then when the crop ratings did not fall as much as expected after a really hot week across the Midwest, that kind of brought their yield models into somewhere around the 174 area, which was down a couple bushels according to my model from the previous week. Soybeans down around 50.9. So the market sold off. So what that tells me is that the market's basically pricing in a corn crop that's somewhere between 172 and 174 right now. Soybeans probably somewhere around 50 to 50 and a half bushels per acre is what they're pricing in. We're going to see those yield expectations continue to erode as long as we're in this dry weather pattern and starting to heat up once again as we go through the final development stages of these crops. And the market's going to be trying to watch that. Right now, export demand is so poor for corn. The trade's really not overly concerned about corn. It's more of a follower of soybeans and wheat. Soybeans, though, I think they're going to be very reluctant to really sell off until they have a better handle of when the erosion in yield is going to stop. Just how small is this crop?
Yeah, even if you lose a bushel per acre, you're getting down on some pretty tight ending stocks, aren't you?
You are. We're playing around that 200 million bushel level, plus or minus, depending what you have for demand estimates. The real key on soybeans, though, that remains an unknown is what's export demand going to be. We know that China has booked almost 3 million metric tons of soybeans from Brazil for shipment in October. And they're starting to ship quite a few for other months around that as well, in September and November. Those are peak shipment times for U.S. soybeans. And so we know that our soybean shipments are going to be down, and we're starting to reflect that in our export sales reports for the new crop. But the question is, they have imported, by the end of September, we figured they will have brought in about 12 million metric tons above what they crushed over the last 6 or 7 months. Most of that, we believe, went into their reserves. Will they pull that out of the reserves then to avoid buying from us? Or will they leave it in reserves and still come back and do a lot of buying minus what they've already bought from Brazil? That's an unknown. That's a wild card. Part of that decision is also being made by the problems in the Panama Canal with water levels low. Drafts on ships have to be less. Freight's going up. Right now, we're figuring freight's about 33 cents a bushel higher for ships that have to go around South America or around Africa. So that raises our costs, makes us less competitive, and it delays delivery on those soybeans, something that Chinese buyers tell us that they're very concerned about.
Yeah, higher freight, and then we're pretty close to contract highs here in terms of prices on soybeans. So that's a headwind too, right?
Yeah, it certainly is. And I don't think that we have enough information here to sustain a rally in soybeans, but neither do we have enough really to sell off. And over the next 30 to 60 days, we should learn a lot about what the size of the crop is, but we'll also learn a lot about what China is going to do on buying our soybeans. And the other factor there is, how does the South American growing season get started? A lot of times with an El Nino, you'll see a delay to the rainy season. It's a little bit early, and we're seeing mixed forecasts on whether that's going to happen or not. So I wouldn't be willing to really stick my neck out and say what's going to happen. But I think that's what China is watching. So next 30 to 60 days should tell us a lot.
So, Arlan, the corn market is held together pretty well, considering we're over 2.2 billion bushel ending stocks figure, a lot because of what soybeans have been doing. But with the cushion that we have there, how many bushels would we have to lose here on the crop to get us below 2 billion?
Yeah, I think we need to drop well below 170, probably into 165 to 167 to actually shrink stocks. Now, to get us below 2 billion depends on your export numbers. It wouldn't take much to get us below 2 billion with USDA's export and feed numbers. But I think what we'll see is as USDA lowers its corn yield, it will lower its export numbers and lower its feed numbers. That's what I expect them to do. And overall, when you look at the fact that we have seen USDA cut 775 million bushels from its old crop export target over the last year, and yet they expect us to go up by 425 to 450 million in the next year, when we've only sold a fraction of what we normally sell in advance of the start of the new marketing year, and Brazil's just getting started on shipping its big crop right now. I find that hard to believe, and I think USDA is going to figure that out when they look at the numbers as well. And then the feed numbers with 7% fewer cattle being fed next year, hog numbers looking to go down as we're cutting the breeding herd right now. Sow slaughter is high. I think we're going to start seeing USDA cut those demand numbers as they cut their yields.
That's going to be pretty hard for that market then to get above $5, isn't it?
Unfortunately, I believe that's the case. Now, it should support the livestock industry and hopefully kind of stop the bleeding here, the red ink in the hog industry, particularly as we build carrying to market. That's been hard on the advanced margins for down the road. But yeah, it's going to be a problem for the crop producer.
And the wheat market, more contract lows here today. Is demand just the biggest problem here, or is it the fact that the specs continue to push the short side of that market?
Yeah, and they're pushing the short side because the demand is so weak. And that continues to be the problem across the board. For corn and soybeans, it's the big production in Brazil. For wheat, it's the big production in Russia. Russia continues to pump wheat onto the world market at a record pace, and they set the world price.
How low do we have to go here to start to stimulate demand from a price standpoint?
Lower than Russia. The problem is the lower we go, the lower they go until they start bringing down their supplies. And so we're looking at the potential for Russian exports now at a record somewhere over 50 million metric tons between what they carry over from last year into this year. So the real question is will the war at some point start interrupting those Russian exports? That's going to be the key question going forward.
What about this cattle market? New contract highs in the September on back and the feeders yesterday, and we had some nice chart action. So a little bit of consolidation with this mixed close here today before the next leg up, or where do you see us going?
Yeah, and I see it as a pretty good bull market symbol right now. So overall, I think this is a good market. We've got tight supplies, and as long as we continue to see that the consumer is willing to pay up for the product, then I think we're going to continue to see this market build. Once the consumer starts to lose confidence, though, and we start to see the consumer confidence index, which was down today, if that falls too much, the consumer will start backing down and start moving down the value chain.
And if they do that, do they go to pork, or what happens here? Because the supply situation is totally different with hogs versus cattle. So hogs, we've got too many supplies up front here, right?
Yeah, exactly right. And pork would be the next one to get it, followed by poultry. And with Prop 12, we're losing a market for a lot of our pork. We could certainly use that demand in the pork side of it.
How much of this is just the normal seasonal slide, and with the big discount that we have, will we catch here pretty soon in the futures?
Well, a lot of it is the seasonal, but we anticipate that we're going to start seeing our numbers decline here shortly. A number of hogs available, that will certainly help. Usually in the fourth quarter, we have big numbers. We should start seeing that pull back a little bit. But I think the next quarterly hogs and pigs report is going to be interesting because I think it's going to start showing the industry starting to pull back a little bit more than what was anticipated.
All right. Thanks for joining us. That's Arlan Suderman with StoneX and Markets Now.